JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 27th of July, 2021. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course, our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So you have to check us out here on jfdbank.com and click on the research tab right there on the top. So now then, guys, jumping into the chart. So the first one I want to pick up here is, Nikkei 225. Just a quick update. So yesterday I talked about this level here, the 27,795 territory. As I said, that in a way, if it provides some sort of support, then maybe we could see a nice rebound here and a push higher. Well, the area did provide support. We did kind of make our way higher, however not significantly, of course, but nevertheless kind of maybe the first step of this idea working out. But again, let's of course wait and see. For now, still, let's say the more comfortable level after a break of which we could consider maybe slightly higher levels could come here on a push above this 28,201 territory. But again, like I said, I'm still considering this idea as a possible one. And yep, let's see if that's going to play out or not. For the downside, again, the same story. We need to see a drop below this 27,385 territory in order to get a little bit more comfortable with the downside. Shanghai Composite. So yesterday, look at this decline here. And yesterday, when I was covering Shanghai Composite, I was saying that if we stay somewhere above this upside line, together with this 200-day EMA, then yep, there is still a chance for a bit of a recovery, maybe here a push back up. But of course, for now, I would say yes. There is still hope. However, looking at the picture right now, the index is still trading. We still have around 50-something minutes left of trading here. So keep your eyes on this upside support line together with the 200-day EMA. If both of those continue to provide support, then yep, like I said, maybe we could see this scenario working out, and we could see a push to the upside towards the 3,503 territory right here. Now, in terms of the downside, of course, now certainly if this upside line gets broken and we see the daily candle also staying below the 200-day EMA, then yep, we could see a further move to the downside. Certainly, currently the Chinese indices are not really performing well lately. Certainly there are some ongoing, not scandals, but kind of disagreements between companies and the ruling party, of course. So, but I'll get to Hang Seng in a bit. But basically, yep, we're seeing this negative effect right now in the equity markets here, in the indices, in the Chinese indices, and yep, for now, looking at the Shanghai Composite, let's see if we can actually stay above this upside line together with the 200-day EMA. Now Hang Seng. Now the technology kind of sector China. I mean, you can see that it's declining. Certainly, the one of the biggest decliners are Tencent and Alibaba, and Tencent is kind of, like I said, currently in debate with the Chinese government due to some due to some entertainment rights. But again, like I said, let's see how all that's going to play out. For now, the Hang Seng Index is not really feeling the love, let's put it this way, and yep, it's drifting further south. Now, most importantly, it dropped below this 26,861 territory. I spoke about this level previously. That was the previous low of July, and yep, we continue to drift to the downside. We managed to also reach the 26,000 mark, and we also fell below it. So in a way, we're still also just trading below that area. I mean, we still have around 50 minutes left of trading, but let's see where this is going to end. If it's still going to stay below that 26,000 territory, well, I'm going to just continue targeting the downside, guys. And my next target here will be the low of the 5th of November, near the of last year, of course, near the 25,343 territory. And then yes, we will take it from there, guys. We'll see if it can reach these two levels. The other one is the 25,093 level, marked by the high of the 4th of November. So, guys, for now, let's see how it's going to play out near this area. If it provides support, then a bit of a rebound here maybe could, or not maybe, but might be possible. So, again, let's see how that's going to play out. And yep, for now, I'm gonna continue, like I said, targeting slightly lower levels. Now, the other story here is the German DAX, and here I'm gonna take a bit of a neutral stand, because again, yesterday we failed to move higher, and but on the positive note, of course, we remained above that 21-day EMA. Yes, in a way, there is still a chance for the index to drift higher, but if we take a look at the cash index right now, we are seeing a bit of a decline. So if yesterday it closed near the 15,619 zone, we are now kind of seeing a bit of a decline on the cash index, and we're currently trading at around 15,575 territory. So basically slightly below yesterday's close, but still above that 21-day EMA. So let's see if that's going to continue to provide support. If it does, then yes, this scenario is still valid. But if it starts breaking and falling below the 21-day EMA, then, well, maybe a bit of a larger correction here to the downside could be possible. Dow Jones Industrial Average, and here, for example, for now, we are kind of but we were pushing higher yesterday. We climbed to create a new all-time high, as you can see here, and the new all-time high was tested during trading hours. Was tested near this level, near the 35,150 zones. So looking at this picture, I mean, at the moment, guys, I mean, some might say maybe we are quite over bought here, but again, you know, that never stopped kind of the indices from moving higher. So at the moment, yes, we are seeing a bit of a corrective move back down. What I would say is that if the index starts falling back below that psychological 35,000 mark, then, well, maybe this is where we could start maybe considering a bit of a larger correction. Oh, not a larger, but just a correction to the downside here, initially aiming for that 21-day EMA. So keep that in mind. But for the upside, certainly a push through the 35,150 zone here maybe something for the bulls that they will consider kind of before jumping in. So yeah, let's keep an eye on that barrier as well. Of course, keep your eyes on the previous all-time high, just in case, the 35,091 zone. We're currently trading below that, and if we also stay below that hurdle, there's a slightly greater chance that we could see maybe a bit of a corrective move to the downside here. And but as I said, I will still stick to that psychological 35,000 mark, just for convenience. DXY, so DXY dollar index and drifted lower, and most important, it broke the upside line here, the one that I talked about, and we're currently sitting below that. And yep, you can see that for now it's not really, doesn't seem very good here for the for the index. Let's see if we can actually push further south. So for now, I'm gonna take a very cautiously bearish approach here, because again, if it stays below this upside line, then my next target is the 21-day EMA. But if that gets cleared, well, this is where it could become interesting, and more sellers could join in. So for now, long story short, guys, you could keep an eye on this 92.51 territory marked by the low of the 22nd of July, and if we clear that, then keep your eyes on that 21-day EMA. But if that gets violated, well, I mean, my next target is the 92 territory, which is near that 200-day EMA. Now jumping into gold, and here you can see yesterday gold took a dive. It didn't really reach this level, the 1814 zone that I talked about. We didn't really clear that. We just kind of came very close to it, and then we reversed back down. Certainly, mainly due to kind of everybody jumping back into riskier assets such as equities. And yep, we can see the effect that we had here. So at the moment, I would say, although now at this point in time it seems that it could go lower, because we're kind of still trading below all of the EMAs on our daily chart. However, still I would prefer to see a drop somewhere below this 1790 territory, somewhere around here, in order to get a little bit more excited with the downside. So for now, guys, I mean, that's the game plan. But again, if we do clear this this area, yes, this will confirm a forthcoming lower low, and potentially a move towards lower levels could be possible. For the upside, it's a straightforward game here. I need to see a push through the 1814 zone here, and then yes, we could consider some higher levels. Now jumping into WTI oil, so beautiful hold up here near this, in between these two levels, the ones that I mentioned yesterday. So quite a good achievement here. So I mean, and yep, we can see a nice reversal back to the upside here. So what I said to you yesterday, that in a way, if we correct back down, but we, let's say, remain somewhere in between these 70-40, between the 70.43 and the 70.79 levels, well, I will kind of stick to the upside, especially if it rebounds here, and it did rebound, and it most importantly traveled back above the 21-day EMA. So now I'm gonna aim for the upside here again, and for now my target will be the 75.47 zone here. So let's see how that's gonna play out, guys. I mean, again, at the moment, it's very interesting here in the oil market. However, if the price starts falling somewhere below the 70.43 territory right here, now that's where it could become a little bit more interesting for a few more sellers, because this could lead to a bit of a larger correction, not a larger, but just a correction here to the downside. Quick update on Bitcoin. So yep, Bitcoin it did push higher. So yesterday I talked about Bitcoin. Yesterday we were getting a hold up here near this these two EMAs, the 100-day and the 200-day EMAs, and I said to you that for now, yes, we could, if we break that area, my next target is somewhere around here near the 41,273. You can see that the crypto went a little bit higher, but didn't really reach that level, but it still ended up drifting back below the 200-day EMA. So of course this doesn't really kind of paint a very positive picture, I would say. For now, I mean, yes, we might see another push higher here. We might see another test of this these two EMAs. But if those, once again, if they provide resistance, and a slide here could be possible. So again, what I'm gonna stick to right now is something like this, guys. So let's see how this is gonna play out, of course. But at the moment, that's my game plan. However, if the, of course, if the crypto travels above these two EMAs and stays above those, then my next target is the 41,273 territory marked by the highest point of June, and then we'll take it from there. AUDNZD, guys. So yesterday I spoke about this one, and or last week, I can't remember actually. I think yesterday I would mention this one, but in either way, guys, still the same game plan remains. I mean, what I need here is I need to see a drop below this 1.05 41 territory. Let me just yep, there we go. 1.05 41 zone. I need to see a drop below that. That's the lowest point of February of this year, of course. And if I'm not mistaken, also, yep, the lowest point of the current lowest point of this year. So you can see that currently, yes, we are getting a hold up, but if we eventually violate that area, then yes, this will confirm a forthcoming lower low. This will confirm a new low for this year, and well, I mean, we could start drifting maybe towards the low of actually not the low, the lowest point of March, or not March, December. Sorry, December of last year, and then we'll of course take it from there. But again, first what we need here is, of course, we need that break below the 1.0541 zone, and then yes, like I said, we'll take it from there. USD CAD very quickly on this one. So yesterday I mentioned the scenario where we could see a bit of a correction, well, a further correction lower if the 200-day EMA together with this 1.2590 territory continue to provide resistance, which, as you can see, they're doing that, and yep, I'm still considering maybe a bit of a move to the downside here towards this upside line taken from the low the 9th of June. So long story short, basically, there is still a chance for the bulls to step in, but let's keep an eye on this upside line together with the 21-day EMA. So, excuse me, guys, my voice is going down a little bit here, but for now, like I said, this is the that's the game plan here on USD CAD, and let's see if that's going to work out. But for the downside, if you're looking for something lower here, then well, at least wait for a break of this this upside line together with the 21-day EMA. Now jumping into USD CHF, here it's a difficult one because it kind of keeps moving sideways here a little bit. So after we had a nice good push to the upside here in mid-June, we started kind of moving sideways a little bit, and yep, we're now kind of stuck in between these two areas. And so on the downside, the 0.9118, and on the upside, we have this 0.9233 level together with the 0.9275 zone right here, marked by the highest point of July, the current highest point of July. No, but to be honest, the way everything's shaping up, it seems that well, it might end up being the highest point of July. In other words, as you can see, for the whole month of July, we have not seen huge kind of volatility here on this pair, so that's why we would rather wait for a clear violation of one of the levels before kind of aiming for the next short-term directional move. GBP Aussie, very quickly, we are at a very key important level here, because this area here, the 1.8762 territory, approximately around here, that's the high of the, or I should say, actually, let me just double check this. There we go. Let me just capture this little high here. There we go. So the 1.8762. Well, yeah, roughly around there. That's the high of the 20th of May of last year, and we have moved nicely here to that level. Certainly, don't get me wrong, there are some other good potential areas of resistance, like for example, this one right here, the low of the first, or actually the 30th of April. That's the lowest point of April, and that's approximately around the 1.8993 zone. Slightly above that, we do have that psychological 1.90 territory, but again, let's see if we can reach that straight away, or will we see a bit of a corrective move lower first. So at the moment, I'm considering maybe to see a slight correction to the downside first before a further move higher, especially if this 1.876263 territory provides resistance. So yep, at the moment, I'm keeping an eye on that one. If we continue to struggle to overcome this barrier, then we'll consider a bit of a corrective move here to the downside. Euro JPY came very close to testing this downside resistance line taken from the high of the 16th of June, and it then kind of decided to reverse back down. However, don't get me wrong, it's still very close to this downside line, and anything can happen today, so we could still get a push through this downside line, but we need that push through this downside line first before aiming for the upside, if of course you're looking for the upside here. So wait for it a little bit here, guys, and also, as we can see here, we have the remaining EMAs, so the 21-day and the 100-day EMA here, also near this area. So in other words, if we get a strong push through all these obstacles, the downside line, the 130.37 territory, and these EMAs, then, well, I mean, we could go for some higher levels. And finally, EURUSD. So yeah, we pushed to the upside. Certainly, the weaker dollar index did kind of play out nicely here for this pair, and we broke the this downside line. So in a way, what I could say here is that in a way, we just might be seeing here a possible falling wedge pattern. So, but let me just quickly confirm that. Okay, so something like this, guys. So, of course, according to all the TA rules, you know that these patterns tend to break to the upside. However, confirmation breaks are still needed, and it seems that we might have got one yesterday. However, still, we didn't really have a strong move higher, and that's where the kind of the slight concern comes in. So that's why I would still prefer to wait for a push above the 1.1830 territory right here, marked by the high of the 22nd of July. At the same time, we might see a push above the 21-day EMA, and this is where more buyers could join in, and then we could see a nice push higher. So basically, I do like these patterns sometimes, because when we see a prevailing trend, for example, falling into the the prevailing trend, for example, is to the downside in this case, then we start forming a falling wedge. These patterns, like I said, tend to push then higher. However, don't get me wrong, there is still an element of the doubt here, and anything could still happen, and we could still see a sharp move to the downside. So that's why I would probably stick to this little hurdle here, the 1.1752, and a nice drop below it would confirm a forthcoming lower low, and then we might even ignore the whole falling wedge pattern. But at the moment, let's see if this is going to work out. I'll pick up on this certainly tomorrow, and we'll take it from there, guys. But again, for the upside, as I said, I need for me to get a little bit more confident with higher levels, I need to see a push above the 1.1830 zone. Okay, so guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. I really appreciate your time, and your views, your likes, your comments, guys. I really do. So thank you very much. And if you want to join me tomorrow morning, as always, at my Traders Espresso, that's 6 o'clock GMT time. For now, have a wonderful trading day. Stay safe. Have your stop losses in place, and everything will be fine. So thank you very much, and bye-bye.